Hi, I'm Kristen King from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. September got off to a fairly quiet start as far as U.S. equity markets were concerned, and if people weren't already on vacation, many were making plans for the Labor Day weekend. August finished with the S&P 500 just below its all-time high, and September kicked off with fresh gains for the NASDAQ 100 and Russell 2000 indices. From a statistical point of view, it seems likely that the momentum that's carried the markets higher through the first 8 months of the year will now run through into the final 3 as well. That's not to say that there aren't any threats to the market and the economy at the moment, because there are. After all, we haven't reached the COVID endgame yet, and the disruption to supply chains and the higher prices they can cause are still very real. C-suite executives and major shareholders seem to be erring on the side of caution once again over the last week, and though there were a smattering of purchases, they were once again outweighed by significant selling activity. There were a number of trades that jumped out at us, both because of their size and who was making them, namely some of the country's richest people. Firstly, billionaire Daniel D'Aniello, a co-founder and current chair of Carlyle Group, one of the country's most prominent private equity firms, sold 5 million shares in the business at $47.10, realizing $235.5 million. Mr. D'Aniello previously had sold another block of 5 million Carlyle Group shares on August 5th at the slightly lower price of $46.80, a trade which generated sale proceeds of $234 million. However, Daniel D'Aniello wasn't the only senior executive taking money off the table. Tim Cook, the CEO of Apple, one of the world's largest companies, was also placing sell orders last week. Mr. Cook sold 2.386 million shares in the iPad and iPhone maker. The stock was sold at $148.58, which raised a cool $354.56 million, whilst another venture capital billionaire investor, Mike Speiser, who is the managing director of Sutter Hill Ventures, raised $158.59 million through the sale of 535,000 shares in cloud computing and data warehouse group Snowflake at $296.44. Mr. Speiser was an early investor in Snowflake, which came to the market via an IPO in a blaze of publicity almost 1 year ago. However, the stock has not really lived up to expectations, gaining just under 20% in the 50 weeks since it listed on the NYSE. And wouldn't you know it, the Walton family have been selling Walmart again, if indeed they ever stopped doing that this year. Jim, Alice, and Robson Walton each sold a block of 363,513 shares at $146.63 a throw, sales which realized just under $950 million for the family, who remain the largest shareholders in the retailing giant. Facebook founder and CEO Mark Zuckerberg raised around $60 million through the sale of just under 145,000 Facebook shares. If we look at Mark Zuckerberg's trading activity through August to early September, we find that he has sold just over 1.7 million shares in Facebook for a total consideration of $618.86 million. Just why are billionaires selling out of companies that they have been long-term holders of or have helped to found? And in some cases, why are they doing so relentlessly even as wider equity markets grind higher? They may all have their reasons, of course, but many of these sellers are shrewd business people, and the others are likely to have some of Wall Street's finest minds advising them and their money. The fact that the 1% are regularly taking money off the table is a trend that we can no longer ignore. It may not be an outright sell signal for retail investors, but if the smart money is selling into the ongoing rally, then we should at least be cautious and not look to chase the market higher from here. That's all we have time for today. Always make sure you do your own due diligence before making any investment decisions.